The chart doesn't lie. And what we're seeing right now in silver is something that only happens once or twice in a generation. A massive vertical move that traders call a God candle, the kind of price action that signals the beginning of something much, much bigger. Silver just blasted through $60 an ounce. Let that sink in for a moment. We haven't seen prices like this in decades. And if you understand what's driving this move, you'll realize we're not at the end of this rally. We're at the beginning. Let me show you exactly what's happening, why this God candle appeared, and what it means for the next phase of this market. Because the institutions know something. The smart money is positioning. And if you're not paying attention right now, you're going to miss the biggest wealth transfer in precious metals history. First, let's talk about what a God candle actually is. In technical analysis, it's a massive single-day or single-week price move that breaks through multiple resistance levels at once. It's not a gradual climb, it's an explosion. The kind of move that catches everyone off guard and forces the market to completely reprice an asset. We saw this in Bitcoin when it went from $10,000 to $20,000 seemingly overnight. We saw it in GameStop during the short squeeze. And now we're seeing it in silver. But here's the difference. Silver isn't a meme stock. It's not a speculative cryptocurrency. It's a 5,000-year-old store of value with industrial applications that are absolutely critical to the modern economy. The God candle that just appeared in silver took the price from the low 30s to over $60 in a matter of months. That's not normal market behavior. That's a fundamental shift in supply and demand dynamics. That's what happens when decades of price suppression finally break. Let me explain what I mean by price suppression. For years, the silver market has been dominated by paper contracts, futures and derivatives that represent far more silver than actually exists in physical form. The COMEX, the major commodities exchange in New York, has been trading silver contracts at ratios of 100 to 1 or even higher. That means for every ounce of physical silver in their vaults, they're trading 100 ounces worth of paper contracts. This creates artificial supply. When you can create unlimited paper silver with the stroke of a keyboard, you can suppress the price indefinitely. Every time silver starts to rally, the big banks flood the market with paper contracts, driving the price back down. It's been happening for decades. But something changed. The physical market started to decouple from the paper market. Industrial demand for silver hit record levels. Solar panel manufacturers, electric vehicle producers, electronics companies, they all need physical silver, not paper promises, actual metal. At the same time, investment demand exploded. Silver ETFs saw massive inflows. Retail investors started buying physical coins and bars at unprecedented rates. The U.S. Mint couldn't keep up with demand for silver eagles. Premiums on physical silver shot up to $8, $10, even $12 over spot price. And here's where it gets really interesting. The big institutional players started to notice. Central banks, which traditionally focus on gold, began adding silver to their reserves. Sovereign wealth funds started accumulating. The smart money realized that silver was the most undervalued asset in the world. Think about this for a second. Gold hit all-time highs above $2,700 an ounce. But silver, which historically trades at a ratio of 15 to 1 with gold, was still languishing in the 30s. That meant the gold-to-silver ratio was sitting at 80 to 1 or higher. Historically, when that ratio gets stretched, it snaps back violently. And that's exactly what we're seeing now. The God candle is the market correcting decades of manipulation and mispricing. It's the physical reality overwhelming the paper fiction. And once this kind of move starts, it doesn't stop easily. Let me give you some historical context. In 1980, silver hit $50 an ounce during the Hunt Brothers squeeze. Adjusted for inflation, that's over $180 in today's dollars. We're not even close to that level yet. In 2011, silver briefly touched $49 during the financial crisis aftermath. But both of those moves were driven primarily by speculation and fear. This time is different. This move is being driven by fundamental supply and demand. The world needs more silver than it's producing. Industrial applications are growing exponentially, and the investment demand is just getting started. Solar energy is the perfect example. Every solar panel requires about 20 grams of silver. The world is installing solar panels at a record pace, driven by climate policies and energy security concerns. China alone is adding more solar capacity than the rest of the world combined. That's millions of ounces of silver being consumed every single year, and that demand is accelerating. Electric vehicles are another massive driver. The average EV uses about twice as much silver as a traditional car. With EV adoption ramping up globally, that's another huge source of industrial demand that wasn't there a decade ago. Then you have 5G infrastructure, medical devices, water purification systems. The list goes on. Silver isn't just a monetary metal anymore. It's a critical industrial commodity that modern civilization depends on. But here's the problem. Silver production isn't keeping up. Most silver comes as a byproduct of mining other metals like copper, lead, and zinc. You can't just open a new silver mine overnight. It takes years of exploration, permitting, and development. And with mining costs rising and ore grades declining, it's getting harder and harder to bring new supply online. The result? A structural deficit. The world is consuming more silver than it's producing. That deficit is being filled by above-ground stockpiles, but those stockpiles are finite. At some point, they run out. And when they do, the price has to rise high enough to either destroy demand or incentivize new production. We're watching that process unfold right now. Now, I want to take a quick moment here because this is important. If you're sitting on retirement savings, maybe you've got $100,000 or more in a traditional IRA or 401k, you need to understand how precious metals can fit into that picture. A lot of people don't realize you can hold physical gold and silver inside a retirement account without triggering taxes or penalties. It's called a gold IRA, and I put together a free guide that explains exactly how it works. You'll find it in the description below. It covers the process, the rules, the custodians you need to work with, everything you need to know. If protecting your retirement savings from inflation and currency debasement is something you're thinking about, it's worth a look. All right, back to what's happening in the silver market right now. Because the God candle isn't just about supply and demand fundamentals. It's also about market structure and the mechanics of how silver trades. Remember those paper contracts I mentioned? The COMEX futures market? Well, when the price starts moving violently to the upside, something interesting happens. Short sellers get squeezed. These are traders and institutions who bet that silver would go down. They sold contracts they didn't own, hoping to buy them back cheaper later. But when the price explodes higher instead, they're forced to cover their positions at a loss. That covering creates even more buying pressure, which pushes the price higher, which forces more shorts to cover, which creates more buying pressure. It's a feedback loop, a short squeeze. And in a market as relatively small as silver, these squeezes can be absolutely explosive. The silver market is tiny compared to other asset classes. The entire above-ground stockpile of investment-grade silver is worth maybe $50 billion. That's less than the market cap of many individual tech stocks. It's a rounding error in the global bond market, which means when big money starts flowing into silver, it moves the price dramatically. And that's exactly what we're seeing. Institutional money is flooding in, hedge funds are going long, family offices are allocating, even some pension funds are starting to add exposure. These aren't retail investors buying a few coins. These are billion-dollar positions being established. The technical picture is equally compelling. Silver broke out of a multi-year consolidation pattern. It cleared major resistance levels that had held for over a decade. The God candle took out every technical barrier in one massive move. And now, from a chart perspective, there's very little overhead resistance until you get to those inflation-adjusted highs near $180. Momentum indicators are showing strength. Volume is confirming the move, and the price action is attracting more and more attention, which brings in more buyers, which pushes the price higher. It's a virtuous cycle for anyone who owns silver. But let's talk about the bigger picture for a moment, because what's happening in silver is part of a much larger shift in the global financial system. We're watching the slow-motion collapse of the post-1971 monetary order. When Nixon closed the gold window and ended the Bretton Woods system, he unleashed an era of pure fiat currency. Money backed by nothing but government promises and central bank printing presses. For 50 years, that system worked. Sort of. But it required ever-increasing amounts of debt, ever larger central bank balance sheets, and ever more aggressive financial engineering. Now we're reaching the limits. Government debt levels are unsustainable. Central banks are trapped between inflation and recession. The dollar's dominance is being challenged by BRICS nations and de-dollarization efforts. Trust in institutions is eroding, and people are looking for alternatives. Gold and silver are the ultimate alternatives. They can't be printed. They can't be debased. They've held value for thousands of years across every civilization and every monetary system. When fiat currencies fail, and they always eventually fail, precious metals survive. We're seeing this play out in real time. Countries like China and Russia have been accumulating gold reserves at record rates. They're building a parallel financial system that doesn't depend on the dollar. They're settling trade in their own currencies. They're creating gold-backed mechanisms for international commerce. Silver is part of this story. As gold becomes less accessible to average investors due to its high price, silver becomes the people's money. It's affordable, it's portable, it's divisible, and it has all the same monetary properties as gold, plus those critical industrial applications. The God candle in silver is telling us that the market is waking up to this reality. It's telling us that the old system is breaking down and a new one is emerging. And in that transition, precious metals are going to play a central role. Let me give you another historical parallel. In the 1970s, we had a similar situation. Inflation was raging, the dollar was losing value, trust in government was low, and gold and silver went on one of the most spectacular bull runs in history. Gold went from $35 an ounce to $850. Silver went from $1.50 to $50. Those are 20x and 30x returns in less than a decade. We're in a similar setup now, but with even more extreme conditions. The money supply has expanded far more than it did in the 70s. Debt levels are far higher, the financial system is far more fragile, and the geopolitical tensions are far more severe. If history rhymes, and it usually does, we're in the early innings of a precious metals bull market that could dwarf what we saw in the 70s. The God candle in silver is the starting gun. It's the signal that the race has begun. Now, I know what some of you are thinking, but the price already went up so much. Isn't it too late to get in? That's the wrong way to think about it. When you see a God candle, you're not looking at the end of a move. You're looking at the beginning of a new trend. Think about Bitcoin in 2020. When it broke above $20,000 and made a God candle, people said it was too late. Then it went to $69,000. Think about Nvidia when it broke out above $200. People said it was too late. Then it went to $500, then split, then went higher again. God candles mark inflection points. They mark the moment when the market fundamentally reprices an asset. Everything that came before is irrelevant. The new trend is what matters. And in silver, that new trend is pointing much, much higher. The analysts who understand this market are putting out price targets that sound crazy to conventional thinking. $100 silver, $150 silver. Some are even talking about $200 or higher. But when you look at the fundamentals, the supply deficit, the industrial demand, the monetary debasement, the geopolitical shifts, those numbers start to make sense. Remember, silver is still trading below its inflation-adjusted all-time high. It's still undervalued relative to gold. It's still undervalued relative to the money supply. It's still undervalued relative to its industrial importance. There's a lot of room for this price to run. And here's the thing about precious metals bull markets. They don't move in straight lines. There will be pullbacks. There will be consolidations. There will be moments of doubt. But the overall trend, once established, tends to persist for years. We saw it in the 70s. We saw it in the 2000s. And we're seeing it now. The smart money understands this. That's why they're accumulating on any weakness. That's why they're building positions for the long term. They're not trying to trade in and out. They're not trying to time every wiggle. They're recognizing a generational opportunity and positioning accordingly. The retail investor who understands this has an advantage. You're not constrained by quarterly reporting requirements. You're not managing other people's money with strict mandates. You can take a long-term view. You can accumulate physical metal and hold it through the volatility. You can benefit from the full magnitude of this move, but you have to act. The God candle is the wake-up call. It's the market screaming at you to pay attention. The institutions are already positioned. The smart money is already in. The question is whether you're going to recognize what's happening and take action, or whether you're going to watch from the sidelines and regret it later. Let me paint you a picture of what the next few years could look like. Silver continues its march higher, driven by relentless industrial demand and growing investment flows. The price breaks $75, then $100. Mainstream media starts covering it. CNBC brings on silver analysts. Your neighbors start asking you about it. More investors pile in, driving the price even higher. Mining stocks go parabolic as profit margins explode. Silver ETFs see record inflows. Physical premiums widen as supply becomes scarce. The COMEX struggles to deliver against contracts. The paper market breaks down completely. At some point, maybe silver hits $150, $200 or higher. The exact number doesn't matter. What matters is that you positioned yourself early in the trend. You recognized the God candle for what it was, a signal that everything had changed, and you acted on it. Or alternatively, you can ignore this. You can dismiss it as hype. You can convince yourself that the old rules still apply, that the paper market will reassert control, that the fundamentals don't matter. And then you can watch as silver does exactly what the chart is telling us it's going to do, and you can explain to yourself why you didn't see it coming. The choice is yours. But the God candle doesn't lie. It's the market's way of telling you that a major move is underway. It's the technical confirmation of the fundamental story. It's the signal that separates those who understand what's happening from those who don't. I've been watching precious metals markets for years. I've seen false starts and failed breakouts. I've seen manipulation and price suppression. But I've also seen what happens when the fundamentals finally overwhelm the paper games. And that's what we're witnessing right now in silver. The supply deficit is real. The industrial demand is real. The monetary debasement is real. The geopolitical shifts are real. And the God candle is the market's way of acknowledging all of it at once. This is not financial advice. I'm not telling you what to do with your money. But I am telling you to pay attention. Study the fundamentals. Look at the charts. Understand the market structure. And make your own informed decision about whether silver deserves a place in your portfolio. Because if this plays out the way the fundamentals suggest it will, we're going to look back on this moment as the beginning of one of the greatest bull markets in precious metals history. The God candle will be remembered as the signal that started it all. And the only question that will matter is whether you recognized it for what it was and positioned yourself accordingly. The market is speaking. The God candle has appeared. The question is, are you listening?